Sean's going to be over at the TV. We're going to talk a little bit about Bollinger Bands. Let's first, Sean, discuss the principles of Bollinger Bands. How are they calculated?
Yeah, great. Thank you for this. And last time we did simple moving averages and we did VWAP, and those are pretty popular. So we move over to Bollinger Bands. You don't actually see us use these on the show on our screen. It kind of clogs things up. But what Bollinger Bands are is basically just two plotted lines that are two standard deviations away from, guess what, an SMA, a simple moving average. So as you can see here, I just threw this up. This is the S&P 500, so it's actually SPY.am. I should have used the futures, not sure why we use this one. And as you can see here, the simple moving average definitely indicated by this pink line. That's easy. We take the closing prices of each one of these candles, plot it for 20 periods, and that gives you a number. That's a simple moving average. Why is that in the middle? That's the mean, right? And now what we're looking at here is two standard deviation points away from the mean gives us the Bollinger Bands. These were actually developed in 1980 by John Bollinger, believe it or not. And there's actually 22 rules, guys, Brendan and David, to follow when using the Bollinger Bands. But if we can throw it to the next slide there, Nikki will show us here. Yeah, a little bit confusing. I'll see if I can step out of the way. But as you can see, the middle band, 20-day simple moving average. We talked about that. Then you have 20-day moving average plus the standard deviation, which is a variance. I wrote this down, square root of the variance. So who knows what that means, but that's why we plot them. This is all that it is. So my brain right now going crazy. I'm still actually thinking about Slack. But you can see here, upper band, lower band, the exact same formation, right? And so what you're actually looking for is, John Bollinger states, when a stock moves two standard deviations away, and if actually we can throw it back to the previous chart maybe of the SPY there, Nikki. Yeah, perfect, look at this, perfect. As you can see, we don't get outside of the bands very often. So a two standard deviation move would be something like a Slack that's moving 15% out. When you get the market moving outside of the bands is when you actually get the explosiveness to one side or to the other. We will talk about trading strategies later. The third slide we actually had was more to your question as well. We're using P-Pro 8, right? And so that's our software here at Day Trade the World, and it's very easy to plot on Bollinger Bands. So all you simply do is right click, you go to indicators, guys, you go to create, Bollinger Bands pops up, boom, you put it right there, and the most popular, most common setting for Bollinger Bands, and I did a lot of research on this, everybody is using 20 periods, guys. So I would definitely use a 20 period, and again, that will adjust based on the time frame of your chart. So if you use a 5-minute chart, that's gonna be 25-minute periods and so on and so forth. So you don't need to get cute with this. The standard deviation, thank you to our team for putting this in, but you never wanna change that off of 2. I did read that if you're expecting explosive moves on stocks, you can adjust that to 2.1. If the stock is a little more mild, you can put it down to 1.9. But again, the standard deviation of the variance, not going to be affected too much with that. And then you just go down here and you want to always display the top, the middle, the bottom, and then you can, and we're going to show this coming up next. It's not on the chart. I got a little cute with it. You can actually shadow in the bands. So that might give you a little bit more visibility to what you trade with. I personally don't do that. We'll show it coming up after, but that just gives you a little bit more visual for that. But very important, change your width to as wide as possible so you get the best looks. This is how you set up Bollinger Bands, and to answer your question, that's sort of the basics of the John Bollinger Bands.
So we have you know, a wide variance of indicators. Obviously we've discussed in the past on other segments. The key we want to reiterate here though, guys, this is not something that we're basing trades off of. It's something that can help confirm an idea. So if you have an idea or you have a level that you like, and then you can add an indicator to kind of assist you in you know, confirming that thought or confirming that kind of path that you're heading on, that's how you want to start using indicators. But overall, Bollinger Band's a very popular one. So let's jump into how we can use Bollinger Bands to help with our trading, Sean.
Yeah, great little talk there about Bollinger Bands and what they mean to us. They're a very strong indicator. The one thing is, and I read here about John Bollinger again, it's not about trading breakouts or anything like that with Bollinger Bands. The one thing, this is another chart pattern. Again, there's about 10 or 15 patterns that you're looking for. For me, and again, we trade this on the show all the time, what you're actually looking for is a contraction of the bands. A contraction of the bands, of course, means lower volatility. The bands can't join together. It's always going to be 2 standard deviations away. So what you're actually looking for, guys, is a longer period of contraction, possibly leading to breakouts. So we actually have on here Roku, and yeah, funny, this is when it was 140 just a couple days ago. But you can see here, look at this, guys, a nice little contraction right here, back and forth, 20 or 30 pennies. As soon as you break out, right, boom, dynamite goes upside. Look at this. You get a little contraction, opens up. This is called the squeeze. You get some contractions here, opens up. Boom goes the dynamite to the upside. Same thing happening over here. Can we throw to the next chart? We'll talk about something else here. Actually, throw back to that last chart for a second quickly if we can. Mess this one up. This is actually in the wrong order. These are the breakouts happening right here. So there's 2 styles. There's the squeeze, and then what we call it is actually just the breakout. So the breakout's happening here. Once you exceed the band, this is not supposed to happen. This does not necessarily mean, guys, that the stock is breaking out higher. What this actually means is we are now overbought. Okay, it's a completely different signal than a VWAP break or a simple moving average break. These breakouts happening right here means it's overbought. So this is actually, guys, an indicator for a short. So as you can see here, downwards, that's the short. Here's the break off again. And again, I believe this is probably intraday. So you get a move up here, but you break way, this is closing and then an open. You get a break way above. That would indicate, guys, that we should come back to the mean, right? Simple moving average. You have that play again over here. You have, look, no breakouts, right? It doesn't go above the Bollinger Band, a little bit there. You have no breakouts, and then right here, 1, 2, 3. Great spot to start building your shorts. What it means is we are now 2 standard deviations away from the mean. So you break up on the Bollinger Band. It's not a sign to go long, guys. It's a sign to say we are now above the 2 standard deviations. So pull it back into the mean. And right here, again, a little blurry, but you get the 30, 40 cents on that one. Nikki, let's throw to the next slide just to do one more breakout here. This is what we talk about with the squeeze. So I'll move over to this side so you can see the first one. Market opens up, right? A lot, the bands open up because again, it's just a 2 standard deviation thing. So as the average bumps up, you get wide, 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 right? As it contradicts, lower, 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 lower. This is a spot telling you there's a breakout about to happen. Boom, it does happen, breaks below the Bollinger Band, and you can see continuation down. Again, you don't have to take the short on a Bollinger Band break. All you're doing is confirming that this level could break one way or the other. That's why you get a tight little squeeze. Same thing happening here. Microsoft, sometimes the stock can go to sleep. And as you can see right here, sleepy, sleepy, sleepy. And it gets to the point now where these lines almost join. I've never actually even seen this. The standard deviation, the upper and the middle, coming very, very close to the SMA. This means you can almost put on a stop order going long or short. There is a big move coming, according to John Bollinger. And as you see right here, breaks the top side and boom, off to the races. One more squeeze play happening on Microsoft. Look at this. It opens up really wide here because you do get a big move down. Remember, these indicators are past results, not telling you what's going to come in the future. You have to use setups. So as you can see right here, big, contraction, open up, contraction again. Then when you get this top blowing off right here, boom, it opens wide up. So those are 2 little strategies you can play, breakouts and squeeze.
Yeah, there's a lot of information obviously online about that squeeze type of idea and a little bit more of, changed indicator, if you want to call it that, that helps along with that. You can read about that on your own time. So Bollinger Bands, guys, I just want to go back to the point that, all they're highlighting is what has already happened. So it's just price action, a visual representation of what has already happened on the chart. So if you're of the mindset that you want to see, visual confirmation of an idea, have a look at Bollinger Bands, a great way to visually see what's happening with price. David.
For sure. Sean, another question for you. What are some of the popular patterns that traders should look out for when using the bands as an indicator?
David, great question. I got to throw this back to David here right now. We're going to do something off the cuff here. David, in school, do they teach you anything about technical analysis?
They do not.
Exactly. Good. Perfect. That's exactly the answer I wanted to hear. And again, that was not pre-planned, but we sort of knew the answer because, I mean, I went to school like 50 years ago. They weren't teaching anything about technical analysis. So a lot of this is learning as you go. So great question, David. Hopefully we can teach you and you can become a trader as well with us. W patterns, right? And again, these are very hard to come by, but when you do see them, they are gold. And I was searching around yesterday, building up this segment for you guys, and found a good one right here in Starbucks. Neil talked about it. We traded Starbucks yesterday. I believe it was the stock of the day or the trade of the day, and we have a little breakout happening right here. And what a W pattern is quite simple. It looks like a W. It's pretty easy, guys. You can see here, you come from the top band down to the bottom band, okay? Then you break through the moving average, then it fails to get higher. It comes straight back down, touches the lower band. It's actually best if this second touch is lower than the first, okay? This is gonna signal a very, very bullish sign once you break up again. So where's the trade, you say? This is the trade. Once you break back above the SMA. So you come up to the top end, rejects the 2 standard deviation move, comes right back through the simple moving average, rejects the move down, then says, you know what? I'm gonna trade right back to the average. Here it is again, rejects that, comes down lower. So you get a lot of pressure here, but then that's relieved once we break through the moving average again, and you can see you are rewarded with a huge breakout move here in Starbucks off a W pattern. W patterns, very, very bullish. Let's show you another one here as we break down the next chart. Here it is again, nice little stock, our favorite, Roku. Happens again here. This one a little more dramatic. Again, it takes time to try to find these, but you can see right here, the W actually starts up here, comes down, touches the bottom, breaks up, chops around, right? Chops back around the moving average. Then when you get this touch again down here and not a continuation down, you get the explosive move once it breaks the simple moving average once again. Guys, that is the key. Look, when you're looking at Bollinger Bands and you're looking to make trades, you need things to happen. You can't just simply go long when it's down here hoping that this Bollinger Band holds. They're not always going to hold. So you wait for the confirmation break. These are called W patterns and they are bullish to the upside. So David, my friend, this is a W pattern. Is there another pattern that you possibly think might happen to give us some bearish signals?
What is the opposite of a W, David? Let's start with that.
I'm going to go with an M pattern.
Hey!
Ding! So, M patterns, great job here. Why don't we throw it to the next chart there? Yeah, so you're actually just looking for the complete opposite. It's the exact same thing, but reversed, guys. So we're not going to beat a dead horse here. It often does look like a little bit of a head and shoulders pattern, but again, we're using Bollinger Bands for this. And normally, guys, this would be, of course, I don't use line charts, but you can see here, it's way easier to see on a line chart. This looks like ding, 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 an M, right? So you get the same kind of a move, starting from the moving average, breaking. This is an aggressive break, so this long on Spotify, huge right here, if you're able to get that break, but comes in, doesn't quite come back to the moving average, but then doesn't really break again once you get this. So I'm very bullish on Spotify during all of this, but once you break the SMA here again and you get the double touch up here, that's the M pattern, that is the bearish pattern. So you get the double touch, it doesn't break, then it breaks down below. It also doesn't violate this again. So the point is, and again, I'm not sure what this is gonna be on the chart, but the breakdown here, 138.40 or so, you grab the short, you don't even have to get out until it retraces back to the SMA, which is about a $2, $1.50 or so winner. And as you can see, this is just on a minute, what is this, a 5-minute interval. So just by taking this trade right here on the 1M top on Spotify, you get in right here, you don't get out until the break again. If you keep getting out on these Bollinger Band breaks, you may miss more downside. So I would always use a simple moving average to get out of that. One more M top for you guys as we continue to go with our technical analysis analysis here, and here you have Enbridge. So we switch it over to Toronto. Again, we use Enbridge, doesn't really move too much. You can see the Bollinger Bands opening up here on the open of the day, right? It's 9:30 right here, so Bollinger Bands are extended. But the best part is, this is a 1-minute chart, so we get enough data in here. Remember, all of these data points rely on 20 periods, right? So as you get going here, we're breaking 10 o'clock, so we have a decent amount of information on board from the open. So what happens again? Bang, one touch down to the SMA. Almost another touch, it doesn't quite get there. So this one's a little bit of a questionable break, but the point is, it comes close enough for me, looks like an M to me. You break that level right there, this is your indicator to go short, guys. And I mean, this is, again, if you look at the chart, we're talking about a big time winner on a stock that doesn't move that much. You get in here, you don't even have to worry about the trade until you're back into that chop. So to answer your question, David, these are two patterns to go. M bottom, M tops, and W bottoms. There's a lot on Bollinger Bands, so if you do research this, you'll come up with a lot of these patterns.
We've learned a little bit about Bollinger Bands, guys. We've learned a little bit about the alphabet today. I hope you've followed along and stuck with us. So great look at Bollinger Bands, guys. You know, just another tool that we can add to help assist us in our trading with price action and confirming an idea. Sean, you know, a really good point to reiterate. I'm going to throw my pen around here. Really good point to reiterate. You know, a way to get confirmation of an idea.
Right. And I just want to wrap this up. Normally we wrap it up at that desk, but I did want to make that perfectly clear, guys. We don't use, Brendan, myself, Neil, a lot of the traders on the floor, you simply cannot use one indicator. And that was my conclusion here. It's not meant to be a standalone tool, right? As you look, and when you look at charts and you're back testing them, everything looks perfect, right? But you need to wait for specific setups. Those M tops and W bottoms, also the squeeze and the breakouts, those don't happen all the time. So you got to be very specific. You got to wait for these moves. I like to play them off of 52-week highs or days high and day low, but I definitely wanted to get that through to you guys. Anybody looking to trade off indicators, it's definitely a good idea to put 2 or 3 in your pocket. We've now done SMAs, we've done VWAPs, we've done Bollingers. They can all be tied with volume. So there's lots to go. Bollinger Bands, John Bollinger, thank you very much for these setups, and we continue to use them here on TraderTV.LIVE.
All right, we had you know, great information there from Sean. Obviously, learning a little bit about Bollinger Bands and how we can you know, use those to help us with our trading. Just another indicator at the end of the day, right, guys? So you know, there's a whole variant, a whole library of indicators that we can add to our charts to help, you know, visually assist us with our trading. So we'll continue along in this series and talk about more indicators to come. I also want to do one of these segments just on price action alone. Get rid of all the indicators off the chart and just have a look at, you know, chart patterns, you know, different candlestick patterns. Price action by itself can be a great tool in and alone, just by itself, when it comes to you know, identifying some of these very same chart patterns. So Bollinger Bands, guys, we're getting on in time here, so let's send it back over to the guys at the desk, and we'll wrap this thing up for the day.